Well, good day, everyone. Welcome to Trading a Smaller Account. I'm Connie Hill. I'm filling in for Barb Armstrong. She went to the Market Drive event in New York over the weekend and is off today, so I'm just going to fill in for her. You know, last week she was going to the Market Drive event, and we put on some trades in this class. Would you believe one of those already hit its target today? That was our class on Friday, and boom, it's hit its target today. Something that some traders like to look for are stocks that are really on the move. So we're going to put a little bit of a focus on that here today. Now, I am joined in the chat by Mike Fairborn, good friend, fellow coach. As you have questions, go ahead, chat those in. I'm going to try to keep track of that. Mike will keep his eyes on the chat, kind of answer maybe some of the things that I can't quite get to. But please let us know because we do want to help you. If you're listening to this on the recording, and I know there are a lot of you that do, when you have questions, you put them out in the YouTube comment section. We'll come back and review those throughout the week so you can get your questions answered fairly quickly as well. Now, I hope you're following us on X. I'm Connie Hill CS. Mike is Mike Fairborn CS. We'll post educational content out in our X account as we notice things that we think are interesting, that we think you might find interesting as well. So happy to see so many of these familiar and friendly faces here today. Let's go through our disclosures and let's get on with our agenda. Options carry a high level of risk and are not suitable for all investors. We will be using the Paper Money software application. It's for educational and informational purposes only. Don't consider it a recommendation. Past performance is no guarantee of future results. And want to kind of point out some of the events that are coming up next, right? Man, we've had a lot of events that are live that you can participate in. We don't charge you for them. We're nice to you. We feed you. Man, you guys are lucky. You're lucky cats, all right? So New York coming up in about a month or so, right? August 8th, we'll be in New York, the Marquis Hotel. Marriott Marquis, that's where the event was this weekend. People really enjoyed it. And then we've got Chicago coming up the 15th and 16th of August. And then DC. Can you believe we're talking about September already? And that DC event will be after Labor Day. And so it's a great time of year to travel if you can get there. Now, I'll take a moment and show you where you can find those events because you're like, man, if I want to register, how do I do that? I'll show you that in just a moment here. Oh, good grief, I didn't finish my disclosures. Okay. What we talk about today, I need to remind you, is for educational and informational purposes only. Don't consider it a recommendation. All right, here's our agenda. We typically take a look at what's going on in the markets. We always want to do some new example trades. And I want to show you something that's happened on a trade that we placed in our account on Friday that already hit its target and kind of the power that's with it. Now, in this class, we do things a little bit differently here, okay? We have some specific rules for those of you that are maybe you're starting out with a smaller account, or maybe you have an allocation to an account that you want to be a little bit more aggressive with, you want to be in growth mode for. It doesn't mean your whole account has to be that way, okay? But maybe you just have a portion of it dedicated to that. So we're focusing on an account with $20,000 paper money. We will not pour more than $5,000 into any single position. And then we don't want to risk more than $400 to $500 per trade. That's the most we're willing to risk. You know, if we hit 5 bad trades in a row, what if we hit our max loss? 400, 400, 400, 400, whole bunch right in a row. We wouldn't be happy about that. But if we're minimizing what our risk potential could possibly be, that helps us out immensely, okay? We're looking for shorter time frames and possibly the intermediate time frames. Typically, we're not looking for buy and holds. We're not looking for dividends. We're looking for stocks that are on the move and like capturing a move where it gives us a decent entry that we like, or that some traders like to use, and then kind of following through with that. So on our bullish strategies, these are all the strategies that we would consider doing. Okay, pretty much something that owning the stock as well as a lot of options. Okay, options give you the opportunity to have a small investment that potentially could give you a big return, because typically they're leveraged positions. All right, our bearish. We haven't been doing bear strategies for a while, but if we did, we'd be looking at long puts, long put verticals, short call verticals. And when markets get a little bit sideways, we'll entertain neutral strategies. Those are going to be iron condors or calendars. Probably not a huge focus on those right now. All right. Somebody's wondering if we have problems with the Thinkorswim charts today. I have not. You're saying, not maybe updating data properly. I've been out there all morning. I haven't seen anything that is off as far as that goes, Ian. However, your fellow traders could chime in here and let you know if they're having any particular issues with that as well. All right. Jose, I'm going to address your question real quick here. I don't think Mike's typed you an answer here quite yet, but this could be a question that a lot of people are interested in, okay? I'd like to know if you could help me with the following issue. If I have an in-the-money call spread on a stock close to its ex-dividend date, should I consider exiting the call spread before this date? That's something to be aware of. I'm glad that you're aware of that, right? Because you do have the potential obligation. And if your strike is in the money, yeah, it's even a higher probability that you could potentially be assigned. And so it's not something that's like, oh, get out at all costs. It's something of, okay, need to be aware of that there's a possibility, yeah, that you could possibly be assigned there. If you want to close it down, you can. You don't have to necessarily. Just be aware that that is a potential outcome of that trade. So appreciate you bringing that up. All right, let's go ahead. Let's head over to my charts here. SPX is up again today. We've been hitting higher highs, higher lows, record highs. And today, again, squeaking out another record high on the S&P, just a little bit shy of 6,200, looks like 6,195. NASDAQ's been moving really well as well. Let's pull up the NDX here. It's got a new all-time high here as well, 22,654. Okay, so given that we're in roughly some definite bullish market conditions, we're going to be looking for bullish opportunities. Now, I want to show you one trade that already executed for us that we just put on Friday. Okay, so it hasn't had a lot of time to really work towards its target, but let me show you what happened here. Stock we took a look at was PGY. I'm going to kind of zoom in here so we can see, yeah, it was just kind of nicely following this blue line. It's a 10-period moving average. The red line's a 30, so we're looking at shorter trend lines, right? Shorter shorter time frames as opposed to focusing on a 100 or a 200-day moving average. We're looking at those that are a little bit shorter. And it's been bouncing along here really nicely, and we got in on a nice bounce here Friday morning. Now, it continued to run the rest of the day. And then today, what did it do? It gapped up and it ran up a little bit. And right at the opening bell, it hit our target. Okay, how sweet is that? Let's show you here on the monitor tab. When we got in, we got filled at 54 cents. And this morning, right 1 minute after the market opened, which is right when options start trading, boom, it fired off. We got filled at something we said, we'd be happy with 86 cents to get that and take the money and run, so to speak, right? Lock in that gain. And we got filled at 96 cents. Okay, so pretty quick return, pretty sweet. We had 8 contracts there. The net difference on that was about $42 per contract. So 42 times the 8 contracts, about 336. So kind of a quick little base hit, I would say. Turns out to be about a 78% return, not including commissions and fees. Okay, we're typically talking about those returns without factoring in commissions, but you always want to figure in commissions, right? Especially if you're trading a smaller number of contracts and the fees are eating up a big percentage of that. With the pricing that we have on our paper money account, 65 cents a contract is really pretty reasonable, but you still have to think about that, right? And keep it in mind. So that leads to the question of, well, where can we find some stocks that are moving quick? Man, we would love it if every single one of our trades did that, right? Boom, boom, move, move. Well, I'm going to show you a scan that you can use that might help. And it's a scan I use a lot. I post about it in my X account most days, not all days, but most days I'll post about my early morning mover scan, trying to identify stocks that are moving bullishly in the market that we might want to consider. Okay, so I'm going to show you the scan so that if you want, you can run it every day. You don't have to wait for me to post my results about it. But then we'll kind of want to walk through a process with you here. So let's go to the scan tab. And let's show you. You don't have to not promise to share it. You can share it with anybody you want to, okay? Let's start out here. This is kind of the default look when you come into StockHacker, right? And so the first parameter that we're going to use is the price of the stock. So I like to use the last price. So I'll just pop last in here. Typically, we'll start at $10. Now, in my early morning mover scan, I don't put a cap, okay? For this class, because maybe we're trying to focus on some lower price stocks, so the options might not be quite so expensive, some people might want to put a cap on it. So for purposes of that, for this class today, we're going to put a cap. I'm going to put it at $150, which some of you are going to go, well, that's not that low, Connie. However, there's a lot of stocks that are priced above $100 that might be really good candidates if they're moving and they have a lot of options activity. Okay. Volume here really means today's volume. So if you're running this first thing in the morning, this is not really effective. So we're gonna take it out. We're gonna put in something else here. So let's go ahead. This is mainly a technical scan, meaning we're not going to use any fundamentals in here. We're looking for some movement. Okay. So we're going to look for some volume that is a lot of activity, and then we're going to look for some movement. So there's one other stock filter we're going to put in here. I shouldn't have deleted one. We're going to put in the percent change because we want stocks that are moving right now. So here we go. Is it at the top one? Did I miss that? Percent. Right at the bottom. Okay, there's our percent change because we're going to look for something that's moving right now today. I'm going to put in plus 1.5%. When we're in a lot of bullish market conditions, sometimes I play with that. Sometimes I'll increase it to 2.5%. And it doesn't mean that we're going to find an entry here on stocks that this will come back with, but at least we'll kind of identify some things that might have some potential setups just because they're moving. Okay. All right. Next, we're going to put in some filters here. We're going to be using this study filter. Remember, it only works in your live account. It doesn't work on the paper side. Okay, so this scan, if you want to recreate it, do it on your live side of your Thinkorswim, and then you can share the results over with your paper money side. All right, let's look for volume here. Volume is really important. I'm going to select average volume here. Now on my early morning movers, I don't actually put in a huge number here. The default here is the average volume over the last 50 days. We're going to take that down. We're going to put 20 days. I'll use 20, sometimes 30, but kind of a shorter time frame, so 4 to 6 weeks. And then the default here is 1 million. And if you're somebody who feels comfortable just trading stocks, you might have this at 250,000. For our purposes, because we want to do a lot of option trades in this class, we are going to increase it. So I am going to leave it at 1 million. Okay, that we want it to be traded at least 1 million shares. Some might raise that threshold to 1.5 million or 2 million. Okay. And then the next ones are critical for helping us identify the trend. All right. If we're in bullish market conditions, we want to see a short-term uptrend and kind of a little bit of an intermediate uptrend. Okay. We want to find stocks that are moving up beyond just today. So we're going to put in here, we're going to come down and choose the study of price performance, and then we're going to do price change. We're going to do this twice because one is going to be geared to a short term, and one's going to be, oops, I picked the wrong one. Let's come back there. Price change, not direction. All right. So first parameter here, we're going to say we're going to look for stocks that are up 15%. In how long a period of time? We're going to say in the last quarter. Okay, so I'm going to put in here about 63 bars. The number of bars you might use in there might be 63, 64, 65. Those are all periods of time that typically fall within a quarter. Okay, so we'll go with 63 here today. And then that would be good for kind of an intermediate trend, right? That the stock is up at least 15%. And then the second one, we're going to make it shorter. We're going to say in the last 21 trading days that, I put that in the wrong spot. Here's the 21 trading days. We want it to go up at least 5%, which doesn't sound like a whole lot, okay? But we want both things there. We want it to be not an intermediate trend that's rolling over and down over the last month. We want both of those to coexist there, okay? That's the extent of that scan. And I've told you a couple of variations that I'll use with it sometimes. Let's go see how many results we get back. All right. Oh, I had this set for 50, and it's going to bring us more than 50. I'm going to set this for 200 and hit this in again, rescan it. So it looks like we've got about 73 that come back on this. Now, if you wanted to filter it further for your purposes, you could. You could have it intersect with the S&P 500 or the NASDAQ or penny spread options if you're solely focused on options. Okay, those are public watch lists. Some you might be familiar with some of them, maybe not so much others, like the penny increment options. Basically identify stocks that are trading tight bid-ask spreads to the point that we're measuring it in pennies as opposed to nickels and dimes and 20 cents. Okay. So some people like to do that. Because some other people use it for other purposes, I'm not going to put it with the intersecting with the penny spread increments, because we actually are going to look at a couple of stocks here and do some stock trades here. Okay. All right. Somebody has a situation here. Matthew says, in Simulation Trader, I'm not able to add a study filter. You have to be on the live side of the live side of a Thinkorswim platform in order to get that study filter to be active. In paper, fundamentals will work, options will work, stock will work, I believe patterns work. It's just this study filter that does not work in paper. Okay, so that's kind of something you need to know in general. Now, another thing that I have on here is I have a column that says 1 month % change. Okay. And we could, and I actually have it sorted this way. I have it sorted right now by a 1 month % change. So this could give us an idea of maybe some stocks that are really on the move, right? If I come down to the bottom of the list, I told it had to have a minimum of 5%, right, in the last month. And so, yeah, that's what the ones on the bottom are, about 5%. But you can see maybe some other ones here that you're like, man, if I could catch one of these type of stocks that's really moving right now, meaning in the last month, and maybe find an ideal opportunity that you like as a trader to get in, a bounce, a breakout out of a pattern, a close above the high of the low day. Those are all potential ones. Now, I hope all of you have this little calculation that does the 1 month. I'm just going to highlight it here and copy it over. I'm going to put it out in the chat. If you don't have that, it's very helpful to kind of see what's going on with these stocks and really focus on the movers. Okay. All of our scripts are not guaranteed as to accuracy or timing. So if you want to use them, great. You don't have to use them. And you need to know that about that. Not guaranteed as to accuracy or timing. Now, I'm going to come in here and I'm going to copy this if you're not familiar with this process, because I know we have some intermediate traders here, and we have some people that maybe might be more beginning traders that might not be aware of all these little things that we're doing with Thinkorswim. Okay, so go to your setup, say open shared item, and then what you do, just copy and paste either that part of the formula in, or you could go all the way back starting at the HTTP. Okay, I just grabbed that little bit right there, and actually, do you know what? I missed the apostrophe or the exclamation point. I missed the exclamation point. That actually is right there in the front. Then you hit preview, and then you can import it and give it a name. Okay, a name you'll recognize, like 1 month % change or 21 days % change. Although these are actual trading bars, so I don't want that to confuse you. Okay, that's about a month. All right, I'm not going to bring it in again. I don't want to junk up my accounts. But now we can, if we want, focus on some of these stocks that are coming back and seeing if they have entries that you might like. Okay, the one that a lot of you are familiar with is this close above the high of the low, but close above the high of the low day, the hold. We've got some interesting stocks here. Now, typically what I'll do is if you want to save this, I've changed this a little bit, right, for our class here, putting a cap on it. I'm going to go ahead and save this watch list today. And I'm just going to call it EMM because that's what I call this, early morning movers abbreviation. Today is the last day of June, June 30th. So I'm going to stick the date on there so I know when we did it. And then we're going to pull it up here. If you go ahead and create this scan and save it as a watch list that's dynamic, you can just bring up that dynamic watch list like I've already kind of got sitting right here. It's called early morning movers based on this scan. Early morning movers bullish is what I have it called. And that little purple target lets you know it's dynamic. It's going to change. In fact, this can change all week long. But because I modified it a little bit for our class, that's why we're just going to pull up the watch list that I just saved. Okay, so come over here. We're going to grab our personal watch list. We're going to go to the EMM. You can see I have a few. And here's today's date, 6/30/25. Usually I have to go in and clean this up. All right. So this is our watch list of the stocks that we could consider using. Now, do we have to? No, we don't have to. But it could be some ideas for you to find things that are moving. Now, many times what I'll do, when I bring up the watch list, I'll sort it on the percent change, or I'll sort it by the 1 month percent change so I can see which ones are moving around. So let's see here. One that's up 223%, URGN. I don't know. Let's go take a look at it, see what it looks like. URGN. Has that one moved around quite a bit? Yeah. Look at this. It was a $3 stock. Not that we focus a lot on lower dollar stocks, but some of you might be cognizant of that. And what has it done in the last little bit? Man, it shot up here. Look at this flagpole. Pop, pop, pop. Consolidation. Looks like it's trying to break out. Might not be that convincing here today. But it is only up 2% today. And so it's like, okay, maybe as we kind of maybe watch these stocks over the next couple days, today and tomorrow, we might identify some potential opportunities. So what I did is I went out and looked through this watch list. I'm going to show you some trades that we could consider that came from this scan. So the very first one is FSLR. All right, FSLR. It was interesting over the weekend. I can't remember if it was the Senate or the House passed the so-called big beautiful bill, and actually it had some surprises in there against some wind energy stocks, and I don't know if it was clean energy. Anyway, there were some restrictions in there that were a little surprising. First Solar happened to be a beneficiary from whatever the wording was in that bill. And so they had a nice pop-up today. Notice how it broke through this 159 area of resistance. Just a nice breakout. We've got some good volume. MACD crossed over the zero line. So it's showing us momentum. It had already been moving that direction, but it crossed the zero line, which means, okay, momentum is really moving in that direction. Okay, so a lot of people, some traders might look at this as an entry signal. Okay, let's go see maybe what. Tony says, I'm not showing any matches in your scan. And it looked like yours, but you're coming up with zero, Tony. If I go back to the scan here, I'm trying to think what might cause that. Make sure in here you've got it just set to all stocks. I didn't really mention that, okay. All stocks. And then make sure this is not a real restrictive list, like if you've got it intersecting with another personal watch list that you have or something. Yeah, it may not come back with a lot of candidates. Okay, just kind of double check your parameters because you should be getting lots of results here. Okay, let's head over to the trade tab for First Solar. Now, it's traded over 4.4 million shares today. We saw that volume was up there almost close to average volume already this morning. And it's got some nice weeklies here. We are going to look at, I picked through the weeklies, but there was not a lot of activity on. So when we don't see a lot of activity, we'll just go to what time frame really has some active options, okay? For spreads, many times traders look for 20 to 40 days worth of time, sometimes out to 50, okay? July is starting to get a little bit short here. So I went out to the August 15th where we see lots of open interest. We see lots of open interest on the call side, on the put side. We could put together some sort of spread trade. Now, the one I was looking at here, and we'll see if these numbers still look good, is doing a long call vertical. Do you know what? This did not come on our search results because do you know what? It's before I modified it for a stock price of 150,000. Okay, so if that one didn't come up on yours and we set the peak at 160 or 150, I just realized that wasn't going to come up in that. In any case, we're going to use it. We're going to look at a 165, 170. The stock's already at 167, so it's kind of in between those two strike prices. And if we say buy vertical, and we take a look at it here, it's a $5 wide spread. Ooh, nice, 240. Our net debit would be 240 here for the opportunity to make what? For the opportunity to make 260 per spread, okay? As far as the max theoretical. We're not gonna try to bleed every little penny out of it, but we can, because we're willing to risk up to $400 to $500 per contract. We can do 2 contracts here, right? Because that would keep us up 480. Max risk if everything in the world went wrong and on options expiration day, it expired out of the money. Now we're going to watch it so that and monitor it. Hopefully that doesn't happen, but we're going to have some exit points in mind with this. So let's say on this, if we do a first trigger sequential, and we'll create an opposite order here. You know, this is really a healthy percentage return, right? We're risking 240 to make 260. We pull up our calculator and say 2.6, the max gain divided by the max loss, 2.4, we're looking at 108%. Well, we don't need to be greedy and say, oh, we've got to get all 108%. We can say, you know, when we get a chunk, just like on our trade that ticked off for us this morning that we just barely put on Friday, if we get a chunk of that gain, let's take the money, bank it, move on to the next trade, okay? So for this particular one, what if we were to go, say, 70%? If we could get 70% of 260, that would put us in the neighborhood of a gain of about $1.56. So if we add 156 to our 240, let's just throw this in, 2.4, then we're going to say, hey, we're going to get out a little bit shy of $4, $3.96. Okay, so I said we're not going to be greedy about it. If we can get it, a big chunk of it, let's do it. Okay, so there's going to be our 3.96. We're going to make this good till canceled. And we're going to go ahead, we're going to submit it, we're going to put it in our grouping here for our trading a smaller account. Now, the one thing I wanted to point out on this, and I didn't, and so let me show you, not the news, let's go to our watch list here. First Solar technically didn't come into our watch list, right? But I want to add it to it. And so trying to kind of create enough space here that we can see it. I wanted to show you that it's up pretty decent in the last month, okay? Maybe I'll just do this with kind of zooming in on the price action and using our trend line. Let's see, today is the 30th. Where's the 30th here? So let's come back to May 30th. Looks like this green candle right there. So it might not look like it's up a ton in the last month, but look at this movement, say from May 30th to kind of up here at the peak of this candle. That's about a 12% move in a shorter period of time. And this move here, let's get rid of that. Let's go, this move from that candle to where it's sitting right now is a move about 21%. So is this thing a mover? Yeah, this thing is a mover, and we're trying to identify those movers and kind of tag along on its coattails. Okay, next up, And Jay, you can let me know if stocks, if that corrected the problem of your stocks not coming up. Looks like you're having that kind of an issue too. Okay, let's take a look at another stock. This is a stock you're probably familiar with, Reddit. I don't know, maybe you are a Reddit social poster reader type thing. This is a stock, this is kind of interesting. It was up here about 230, pulled back like most stocks did, formed what we call a base, meaning it had some time just kind of going a little bit sideways, and it's called forming a base. And sometimes it can be an area where some stocks will start accumulating some volume kind of at those lower levels, and then we would look for it to run back up. Okay, if we were looking at this as a pattern, say like a price pattern, do any of you have a guess what price patterns we might be seeing on here? There could be multiple ones. Okay, if you think you know one, go ahead and chat it in. I'm going to point out one to you that may be kind of like would that look like maybe a cup, and looking for a cup and handle to form? Cup and handle is usually a little bit longer period of time, okay, meaning encompassing over maybe 2-3 months, can go longer than that. And so this might be our little cup formation, which means we would look for it to maybe get back up to that 230 area. Right now it's at 150, 151. So yeah, there's $100 or $80 rather, something in that neighborhood that it looks like maybe it could have some potential upside. Now it might run into resistance here about 184. That's a possibility, right? Up here a little bit higher. But today, as far as an entry signal today, what do we have here? Look at this, it's run up, little 2-day pullback, runs up again, little 2-day pullback, and pop again. What's that? It's not the close above the high of the low day. It's because we're not at the close of the day. But it definitely is a move or a trade above the high of the low day. And some people like to use that. They wouldn't mind doing that. All right, so let's see here. This is a $151 stock. So it must have been a little bit under that when it first showed up on our scan here. And it's traded over 6 million shares today. We love to see trading activity like that because that means usually the options can be a little bit, or we're hoping to see them a little bit liquid. Now, in the case here, the ones with 18 days, we're getting a little short on that now. I went hunting in this July 25 space. I thought, let's see if we have some decent open interest here for some strikes that might be interesting. And what I came across was this 150, 155. We've got 800 contracts, 150 contracts that are the open interest this morning. We've got some volume activity. So yeah, we're seeing some activity here. And we are going to do another long vertical. Okay. These are expensive options to buy it alone. We could not buy this in our account, right? Pay $12.70 for that option. We couldn't do it, right? We can't risk that much. So that's why these verticals can be so incredibly helpful. So we're actually going to do a buy vertical. Going to use calls again. And let's look at these numbers here. I'm going to go back to 160 so it's a little bit easier on our math here. Now we may have to move, we may need to adjust this a little bit, maybe because of how the price of the stock moved. Let's take a look at some of these numbers here. The stock's at 151 and it would need to get beyond 152. It would have 25 days to do it. Now, a stock that's moving pretty nicely, and what was this one? Oh, it's not coming up right now. I was going to say, what is it doing right now? It is moving, okay? We would be risking $1.60 to make what? Well, what do we need to add to 160 to get it up to $2.50? That's going to be 90 cents. So let's run some numbers here, see if you're comfortable with it, okay? Because the max theoretical gain here would be 90 cents, right? Our 0.9. Divide that by our net debit, our max out of pocket 1.6, so max gain divided by the max loss, is about 56%. Now, sometimes when people are doing long verticals, they're looking for a bigger payoff, okay? They might not be satisfied with something that's like 56%, but if you are somebody that's okay with that, then you might consider doing this as a paper trade. We're going to do it as an example trade in our account, knowing that it's just going to kind of be a base hit type of trade. Okay, for some of you that might work. I would be tempted to come out to the 152, 155 if we had more open interest here. I mean, if you're going to do, say, one contract or maybe two contracts, which maybe that's all we could do in this class anyway, then you might feel comfortable doing that. But I'm going to keep it in the less aggressive area because of the lighter, or because of that interest, that open interest. Okay, but I could see some people wanting to spread that out. If we did a blast all and said, okay, let's do 152.50 and 155, then you'd be risking, we'll lock that in at $1.10. You'd be risking $1.10 to make what? $1.40. Totally different percentage. That's going to be over 100% potential return if the stock does that. Okay, so some of you might feel comfortable with that, somebody might not. All right, Rhonda's thinking, man, that spread is huge. Let's talk about that, Rhonda. What is huge? All right, we'll look at it in terms of a percent. Okay, because that's what traders will look for. If it's a big percent of it, yeah, they wouldn't feel comfortable. So let's take, for example, 1150 by 1185. That's going to be this first strike here that we're using. That's going to be about what? About 35 cents, right? Yeah, it's going to be about 35 cents spread. So let's take 35 cents and divide it by the ask price of 10.50. See what that comes up as a percentage. 0.35 divided by by 10.65. I think, oh no, it's 11.75. I kept moving around there a little bit. 11.75 is about 2.9%. Okay, so percentage-wise, you know, it's actually pretty efficient. You know, when traders are looking at numbers, you know, if they can get a spread less than 5%, man, it's almost like, yes, we'll be happy about that. Okay, 7-8%, you might think about it a little bit. Some traders will draw the line at 10%. It doesn't mean you have to draw the line there. So something coming in at 2.9% is like, okay, that's actually pretty efficient. Okay, I'm glad you brought that up because it's the percentage we want to look at and not just the value. Not just say, you know, 11.75. Oh, we're in a smaller account. What can we do about it? All right. Coming back to our trade here, we got rid of the other one. I'm going to go ahead. We're going to risk 160, and can we do 3 contracts here? We can, right? We can do 3 contracts because our risk 3 times 160 is going to be putting us close to is that going to be 480? Is that right? If we go 160 times 3 contracts, we'd be risking $480. That keeps us below our cap of 500. So we're going to do the 3 contracts, but we're going to say, let's get out if we get a chunk of it. This one is not as big of a chunk to get, right? Because the net debit is bigger than what the gain is, right? It's only 90 cents on the gain. But what if we can get a chunk of it? Okay, what if we can get 80% of it? Okay, if we can get 80% of 90, so 0.9 times 0.8, that'd be about 72 cents. Okay, so we'll add 72. Let's add our $1.60 to it, 1.60 to 232. Okay, we'll get out at 232. That will be just fine. Create an opposite order, and that's where we would look to get out. Now, are there other places we might consider exiting? Yeah, certainly. If we have a technical breakdown, yeah, we would consider exiting the trade or changing the trade. What does changing the trade encompass? Changing the trade encompasses maybe buying back one leg and keeping the other leg. Okay, in this case, we're looking for a little bit of movement. It doesn't have to go a big distance, 151 up to 152.50, right? About $1 and a nickel. So it's not a big ask of the stock on something that's moving. So the idea would be hopefully it would hit that target quickly before we meet again and would be out of the trade. Okay, so we're going to go ahead. We're going to push this on. We're going to put that in our trading a smaller account bucket. Now, our existing trades right now haven't really moved a whole lot since Friday, with the exception of the one that I showed you. Now, we've got a couple on here that are lower price stocks that I want to take a look at. There's a couple of trades. I'm gonna show you the stocks, and then I may have to do one of the trades after our class is over. Okay. Want to look at this one first. CRSP, CRISPR Therapeutics, and CRISPR should be on our list here. Okay. In the last month, it's up about 38%. Today, it's up kind of big, actually. I'm glad it's pulling back, actually, a little bit. 5.89%. So is this a moving stock? It is. What potential entry might it have? Well, I drew it in here a little bit. Okay, I drew in. We've got kind of a sharp rise up, pop, pop, pop for 3 days. So kind of a little bit of a flag pull. And then a little bit of flagging action, kind of going out straight, like a flag in a stiff breeze, and then popping out today. Now, some people might say, well, let me see if it pulls back even a little bit more. Maybe I can get it to pull back a little bit and get it at a little bit cheaper price. You certainly could try that, right? If you like this as an entry. For our purposes, because we're not going to be hanging out at the closing bell or before the closing bell, we're going to do it based on the fact that it looks like a clean breakout out of that flag formation. And I do like the what we're seeing here. Now, on a flag formation, if the stock retraces down into the flag consolidation area, we want to be out of there, okay? So on this one, what we're going to do, we're going to put a stop. Looks like that's at about, what, 46.28 is kind of that kind of lower part of the range. Some of you might even say, well, what's the low point on this candle? That is 45.60. Okay, I actually like that a little bit better. Give it a little bit of wiggle room because this is a stock that moves, okay? And we could have a target based on the flag pattern, right? And that's up here about 52.50-ish. But if I show you a little bit longer term chart, look where it has been in the past. It's been up here at 55. It's been up here at 57. It's been up here at 63. Okay, so what we're going to do is we're going to not necessarily take it out at a target on a flag pattern, although somebody could. But the idea is we're going to keep notching up our stop loss. If this thing continues to go, maybe even past its flag target, we're going to move that stop loss up and inch it up so that we're just going to kind of follow it if this stock continues to move, because it has a pattern of running up a couple days, pulling back a couple days, running up a couple days, pulling back a couple days. Okay, so we don't want to be too tight on it, but we're going to give it a little bit of breathing room. But our first initial exit, we'll put it based on the price that low here. Now, how many shares can we buy? The stocks, got up to $50. Okay, so that's hitting our threshold. Let's not do 100 shares, okay? We're going to go with 80 shares here. We don't want to stretch our account too much, okay? So we're going to do 80 shares here. That's going to put it less than 5,000 per position for the position on this, right? It's moving along. And then let's do a first trigger sequential, and we'll put in our stop loss here as well, right? I'm going to put in the opposite order. We're going to make that a stop. And when it gets down to that low price, it should trigger a market order. About 45.60 is where we want that to trigger. We don't know what the price will be. It's not guaranteed, but would want to get out at the next available price with that, if indeed it dropped that low. Okay, we're going to send this stock in. Now, I hope you guys have all become subscribed to our Trader Talks channel so that you can find our content a lot easier. All right, I'm going to just hop over real quickly. When you're on our Trader Talks channel, you can see what's coming up. You can see some of our recent content that we've created. We've got what's called bite-sized content, which are smaller videos. In fact, I just put one out there Friday to do customized or actually, no, that was a week ago, how to customize your drawing tools, your drawing colors. I've got another one that hopefully is going to get approved today, teaching you how to build that little toolbar that I have on my screen on my charts. And so just there's a lot of ways for you to find our content. And if you're a subscriber, makes it really easy to do so. Now, I don't see any surveys out there today. If there were, Michael reposted it here, but I didn't notice that. But we put in 3 new trades here. We've got 2 long verticals, so we're looking bullish. We put in this last trade, CRISPR, as a stock trade in and of itself. There were a couple more I wanted to look at, and you could take a look at yourself that came up on the scan that I taught you. That Oracle and STNE were stocks that if we had time, I'd take you out there to it. But my time is up. Appreciate you being here. Going to have just a little break in our scheduling. And coming up after me at the top of the hour, I forgot to look to see who that was going to be, but I'm sure it's good. So tune back in for our next webcast that starts at the top of the hour. Mike, thank you so much for helping out in the chat. I'll review your questions if there's some things I need to bring to our class on Friday. Okay, so thanks everyone. We'll see you again this week. I'll see you this afternoon when you come to the ETF class at 4 Eastern. Bye-bye.